Now, the JSE expected to open to positive global markets today after U.S. markets ended higher overnight. Gary Booysen is portfolio manager at Rand Swiss, joining us now for a quick market update. Gary, good morning to you. Your snapshot overview of how the local index is performing in early trade.
No question. We had a huge day up on the S&P 500 last night. So that optimism is feeding into the market this morning. We are seeing, I suppose, it coming through both in the equity market and the currency market. So against the US dollar, we're down to around 18 to the US dollar, which is significantly better than we saw last week, above 18.50. So that might have taken a little bit of a shine off maybe some of the resource counters. So we've got the resource index down around 0.5%. But overall, the all-share index up about 1/3 of 1%, financial index up almost 2/3 of 1%, and the industrial index leading the way up just under 1%. So overall, yes, we're definitely seeing a positive open. A little bit of corporate news has hindered pick and pay, so that's down around 4%. But the heavyweights like Naspers, that's up almost 2%. Also, the likes of MTN doing fairly well on the day, up about 1.8% currently.
Let's look over to China. It was set to release its GDP figures for the third quarter, but those results, it would appear, have been postponed. What's going on there?
Well, I think it's a political thing. So, every now and again, China does delay data releases. The GDP numbers are very closely watched. So it is a big delay that they've put through. But this is all part of their twice per decade, Communist Party conference. It's currently going on this week. So I think the view certainly is that, they didn't want anything to distract from what was happening at the conference. Western economists, penciled in growth just above around 3%, and Beijing had said for this year they were looking at around 5.5% GDP growth. And I suppose, the authorities, they're probably not wanting to see a number too significantly different from that and distract from what was going on at the conference. That said, obviously China has had those aggressive COVID lockdowns following their zero COVID policy. So, it is expected that the GDP is going to be significantly below that 5.5%. But I think the view there is, the stat would have given us information around July to September, and it was probably didn't want the distraction. The delay is indefinite, so we don't know when we are going to get those numbers, but we'd assume that sometime after the conference finishes, they will be released into the market.
All right, let's look at gold prices now. They've steadied at around $1,650 an ounce, pausing a recent slide. Talk us through those developments.
Well, I suppose it all comes down to the Fed. So when you look at it, let's say 1650 on the gold price, there's two components to that. There's the dollar component and there's the gold component. So as anyone who's been watching markets will know that the dollar has been absolutely unstoppable this year. It's really been the only place to have money. Equity markets are down, bond markets are down, and the one place investors have found safety is in the dollar. And as that dollar just got stronger and stronger, that's pulled the dollar gold price down. If you look at the gold versus, let's say the South African rand, it actually hasn't done too badly. With the dollar getting stronger, the gold prices have actually ticked up somewhat against the South African rand. But as long as we have rising interest rates, gold will probably be a slightly less attractive commodity because it obviously doesn't pay an interest rate. I suppose it really depends though on how bad things get, because when people really start to panic, we'll see whether gold still has that safe haven status. It has been a form of money for thousands of years. So the potential for people to move back into it, if we really see these markets falling apart or systemic issues, is definitely there. And then I suppose 1600, say 1600, 1650 on the dollar gold price doesn't look too bad.
Yeah, let's conclude the conversation with Pick n Pay. You've already touched on how they are performing at the JSE. This company publishing its interim results for the 26 weeks, which ended on the 28th of August 2022, including the all-important interim dividend. How are their numbers looking?
No, so the numbers didn't actually look too bad, but clearly the market was expecting a little more from Pick n Pay. So the dividend is up almost a quarter to 44 cents per share, or slightly more than 44 cents per share. Headline earnings were up almost 60% as well. Profit after tax up 52.7%. So we really have a decent, what at the face of it looks like a good set of numbers. I think once you dig into it, you see the problem though. Obviously, this is coming off a very low base. So in last year's numbers, we obviously had still COVID liquor restrictions. We had the civil unrest as well. So really 2021's numbers were just so bad, it's making these numbers look very, very good. And unfortunately, they do highlight things like, the increased cost of security and insurance after the civil unrest. So market, probably hoping for a little bit of a more aggressive bounce back, but overall, not a bad set of numbers, but a difficult operating environment. And I think that's what the market's focusing on.
Gary Booysen, Portfolio Manager at Rand Swiss, thank you very much for that market update.